Hello and welcome to the look ahead for Friday, the 22nd of August with me, Fiona Cincotta, Senior Market Analyst at City Index. So it's finally here. We've been waiting for it all week. Friday at 2 p.m. UK time, 10 a.m. Eastern time. We've got Federal Reserve Chair Jerome Powell will be speaking at the Federal Reserve's Jackson Hole Symposium event. Now, the focus will be squarely on whether Federal Reserve Chair is willing to or interested in cutting interest rates in the September meeting. I think expecting guidance much beyond that is looking likely, given that the Fed has shown that it's not really willing to provide guidance for many future meetings, given the uncertainties surrounding the circumstances. But that will be the main focus, as we said. Will the Fed be looking to cut interest rates in that 16-17 meeting? Now, it's worth keeping in mind that in previous recent speeches that we've had from Federal Reserve Chair Jerome Powell, he has adopted a slightly more hawkish bias, very much comfortable with that wait and see approach, looking for more data to clarify the picture of inflation as tariffs hit. Now, obviously, we haven't heard from him since we've had that weak jobs report. So that will be key to see what sort of impact the weakness in the jobs market is having on Fed thinking. Obviously, today we've also seen US jobless claims come in weaker than expected. But just as far as history takes us, this is the seventh meeting. This is the seventh time that Jerome Powell is speaking at the Jackson Hole Symposium. And broadly speaking, according to research done by Reuters, the market reaction following the month following Powell's speeches has actually been more of a hawkish impact. So we've seen the US dollar has on average risen 1.4% in the month following Powell's Jackson Hole speech, and the S&P 500 has on average fallen 2% in the month following. So this is really interesting, and it sort of ties in with what we might be seeing in the market as we head into the Federal Reserve Chair Jerome Powell's speech tomorrow. It's also worth keeping in mind that obviously there have been other Fed speakers who are speaking ahead of Powell. We've already heard from Fed Hammock, who actually said that if there was the Fed meeting tomorrow, that they wouldn't be cutting, he wouldn't vote to cut rates. So that's a little bit of a hawkish stance that's potentially giving us some insight as to what to expect for tomorrow. Now, this chart that we're looking at here, this is Euro US dollar. We're obviously seeing some strengthening of the US dollar against the euro here. It's breaking through that 50 SMA, and just also worth highlighting as well what's going on as far as Trump and the Fed is concerned, because this is all coming at a time where where Trump has been quite vocal in his desire for lower rates, and has vocally spoken out against his Powell, saying that he believes that he should cut rates more aggressively and faster pace. Now, more recently, we've seen this sort of tactic change. And yesterday, I mentioned on this video that Lisa Cook or Trump has sort of said how he was looking for the resignation of Lisa Cook, who has said that she won't resign. But we've also heard now that the Department of Justice is investigating. It's to do with some mortgages that she has. Now, this is quite interesting because it could be a case of, well, Trump has realized that he can't remove Federal Reserve Chair Jerome Powell. We have obviously saw the markets react very badly on the instances that he tried to do, or at least speak out against Powell. But if he does look to potentially remove Cook, then we could be seeing Trump sort of really angle for building a majority on the FOMC. We've already got Bowman and Waller, who are voting to cut rates, as we saw in the meeting minutes. There's been a recent replacement who is a dovish replacement by Trump as well. If he replaces Cook as well, then we could see that the majority is starting to move in Trump's favor. But as I said, this is the euro US dollar. We've broken below that 50 SMA as it trades in that symmetrical triangle. Now it's come across, the price has failed to build a higher high above that 117 level. 117 is proving to be quite a difficult resistance level, but actually with the breakdown that 50 SMA, the next one we're looking at down here is 116. Sorry, the 115 sort of 75 level, which is a support zone that we've seen that from the April high, also the low that we saw in mid-July. Now, if we do get a break below there, that's going to bring the lower band of the rising trend line in focus there at 114.80, and then also this level here, 114, the August low. Break below there will create a lower low. On the upside, should we hear a slightly more dovish sounding Powell, who is prepared and hinting towards a September cut, then we could see a reversal here. This is that 50 SMA levels around the 116.50, a rise above there, and also the 117 level is needed in order to create a higher high and bring that 118 into focus. Also, just having a look here at the US dollar, Japanese yen. It's been very much sort of range bound trading within a familiar, excuse me, familiar pattern, familiar levels. On the upside, 148.50. That's the level that we'll be watching on the upside. If we see that US dollar strength continue and towards the 200 SMA of 149.20. But if we get a rise above this level here on a slightly more hawkish Fed, on a patient Fed, then that would create a higher high. And eventually we'll be looking towards that 150 sort of 80 level that we saw back at the beginning of August. Any sense for dovish Fed, then we'll be looking at the 50 SMA there at 146.71 and also at 146 on the downside. Just lastly, I'm going to bring up the Dow Jones, because we've also been seeing this rotation out of tech this week and into value, which has benefited the Dow Jones a little bit. But even so, today we're still seeing the Dow come under pressure. Again, it's failed to really move above that 45,000 level, a level which has been really quite important over the past year or so for the Dow Jones, but there hasn't been a meaningful move above that level. We've moved away now, and we are just testing that rising trend line dating back to April this year. If we do get a break below there, and then also the 44,500, that's going to open the door to the 44,000 level. Obviously, a hawkish sounding Fed may see stock sell off, particularly tech stocks, but that could also, we'd expect to see some weakness in the Dow Jones. On the upside, we need to close above the 45,000 in order to really look towards blue skies and fresh all-time highs. So I hope that you've liked everything that we've talked about, and if you have, then please do give this video a like and do subscribe for more videos like it.